Good morning, folks. It is 3:24. We had a bullish week. We're going to review a bunch of tickers. First, I will release a weekly review at the end of the day tonight. So before tomorrow's open, you should have a video with this strategy. It should be about 5 minutes tops. Please watch it because I'm going to focus on what I expect in prices in both ways. If this happens, what we do, and if that happens, what we do, at least from my perspective. So don't skip it. Look for it. If it doesn't come your way, look for it and ask me about it. It is a bullish market, as you can see. We drew these lines weeks ago, and they're almost there. We still have a stall in the market in the sense where a lot of stocks are not there. We had a handful of stocks levitate the market at times where they needed it, so that the scoreboard looks a lot bullish than the actual makeup of the stock market. So on the face of it, it's super healthy. There are some cracks, and we'll talk about those as they come up. So pay attention to the big stocks like Nvidia, Apple especially. There's a big story in Apple coming. I don't know when, but there is one. Okay, soon enough, I should say. This is the target area, 530 to 560. We've said that. We are pretty dang close. We did have a bullish Friday that turned bearish at the end, but the week was definitely bullish, except if you look at the small caps, but that's a longer story. So from here, what do? We just focus in on what's going to happen with the individual stocks. So I'm not going to trade the scoreboard. Like if I'm investing in stock A and B and C, I should ignore the scoreboard to a degree. I shouldn't get long this stock because the scoreboard is going up, is what I'm saying. So make sure we go long and short individual stocks for real reasons. Okay, having said that, we're just going to jump into it. Yep, this one would be best. I'll jump into the 2-hour chart. Apple is the first one. These are alphabetical, so you can skip through the tickers you don't want, and they're broken up into 3 different videos. This is one. Apple, we've mentioned that it lost an important line at 180 and never recovered it. This week it came pretty darn close, and it didn't. So last week. This coming week, if Apple loses the low from a few weeks ago, which is right above 167, Apple is going to finish that third, and more in a series of lower lows and lower highs. Let's just go for Apple will be below 162. So the Apple job is to get above 179, 180 this week. Otherwise, it's probably going to drift lower. And what will the market do? ABT, it's falling into a base, technically. Like if you ask where's support, somebody will tell you 109 or 110. Well, that's fine and dandy, but I'm going to ask what happens if they lose 110? They can lose another $8 pretty quickly. So yes, this is a bounce zone, but be careful from the bounce level here for it to hit sellers and curl back down. And if it hits these levels and loses them, the target would be down here. So I'm not saying it is going here. Just be aware that this bounce may not hold very well. Yes, support, but there's a lot of open space below. And a lot of sellers at 114 and 116. Ticker number 2. By the way, we have a lot of tickers, so we're going to go quickly. We have like 125. So this one has sellers above 540, hard sellers, and some buyers at 470 and better buyers at 450. It's stuck in the middle. If you go long, you're guessing. If you go short, you're guessing. If you're actively trading, pop into the live room. We can help you with that. Affirm. I remember when it was rising, I had dozens of requests. Can I go long? Can I go long? I don't have anybody coming to me saying, can I go long now? Because it's a lot lower than before. I like the fact that it gave up a lot, so it's better value, but I don't think it's for me yet. There are a lot of sellers from this rally. One can say a lot of resistance at 42. Of course, this one here, but it's not very hard. This one is a lot harder. So to get out of 45 and 46, they would need some sort of a catalyst, like a huge earnings reaction or something. If you lose 32, you're going to get like a $28 entry point, which would be more attractive for me. Affirm rallied too much. It fell too much and it rallied too much. It's not for me. I meant these words when I put it up here. Support zone if lost, so they need to recover a support zone lost. Otherwise, there's more downside to go. So if I'm long, I would not add at this point. I would wait. AI, I'm wondering why the company that is called AI is not doing well as far as AI is concerned. How do I gauge that? There's no sales growth. There's more. One could say that there's more spending growth than sales growth. What's going on? That's my question there. Luckily, technically, there's a base below 27. So to lose 26 is going to take quite a bit. To lose 24 also. So this box, if you see here from before, this area of 32 is still a problem. If you look at it, yes, they went above it, but that's where they died. Yes, they went above it in an overshoot, but that's where they died. These were the most bullish markets I've ever seen, driven by this particular theme, which is the name of the company. So if it cannot make a higher high, I wonder what the outlook of this stock is. Not the company, the stock. Why can't it get out of this? So Wall Street does not like it above 32. So right in the middle, I'm not doing anything. If I got long here, I'm not adding here. ALB, I have tracked it for other people. I've been hesitant trading it, and probably for good reason. It is stuck right now, technically. This was a target zone from a while back. And when we draw lines and they look ridiculous, like when I did this, I'm pretty sure some people said, what do you, no way. And look at where we are. Technically, we are almost at a target that we drew. So I wouldn't go short here. I wouldn't panic out if I'm long. I wouldn't add either until they can prove to me that this is going to recover. There is a lot of support at 116, even more support at 108. So that's why I wouldn't panic, but I don't think I want to add. The market's at all-time highs, and this one cannot find a base. What happens if the market's correct a little bit? You should think about that. Amazon, first of all, on ALB, would I go long here? If I'm not long and I want it for a long term for an investment, I will take a 20% stake, no more. Clearly, Amazon is a great company, but it is struggling with breaking out, right? So if you give me this stock on a weekly basis, I would short it. Short it via credit call spread, debit put spread type of a deal. It's almost at our target. The breakout was down in 148. It's almost at a prior fail. In 2021, pandemic rally, and again later that year, and again a little bit earlier in 2022, and 2 years ago, sorry, and now. So what is it going to take for Amazon to break out? That's a rhetorical question. Why is it struggling so badly? Right? It averted this area, this dip, but that is a void. The V is for void. In other words, if it loses, when it loses 167, it's a fast strip to 159. But that's not the conversation today. The conversation is, can they make an all-time high off of the support at 74, 72, and 71? Okay, you do have support. It probably will be 176 at some point this week, or even 175, if not at a high in this area. So be careful. Amazon is pretty tricky. Clearly a good company, but technically it's hung up. This one is, I would bet down from here if you ask me to buy a put or a call. I'm not going to, because I don't trade that stock, but it looks like they lost footing back in this area here at 34.50. That happened to be January of this year, and they're trying to recover it. So they did make headway by going above 32. So a dip to 32.5 or 32 should find support. So if I'm a trader, I might have better entries. If I'm an investor, I mean, okay, I can nibble long here if I'm not already long. What is this? Okay, extremely strong trend. So the question is, are they running into prior fails? Yes. Pretty old fail, 22 February, pretty harsh. If I'm long, this would be an exit point, not an entry point for me. On a weekly basis, they spent 2 weeks fighting for this, and they failed right around here. So yes, they can get to 76 or 80. But are you trading or investing? Make sure you know the difference. Technically, a dip to 66 would not be surprising, and it would not be unhealthy. This is a bearish stock, technically. It might see 36 this week before 41, and it would be a buying opportunity into 35 for traders. In other words, if I'm a trader, and if this happens, that'd be okay with me. There is support. This whole thing is support. Now, if you lose this guy, you go lower, but that is not the conversation now. The conversation is, can they break out from Thursday's high? If they can, then they can get to here. So the opportunity is, use the support to mount another attack at the failure from last week. That's the comment on this one, those last few words. Rewind it if you're actually trading it. Pretty scary stuff going on here. This company rallied, I don't know, 10, 20, 30, 40% in one day for nothing. And now it is lagging the market. At one point, it was leading the market. I believe these two boxes were for earnings. So now we're stuck in a range of earnings. And this arrow might finish if they don't go above 145. And if this arrow finishes, this arrow is in play, and it's realistic. What am I saying? ARM, better get a shot in the arm, or it's going to drift. It's at risk of losing 100 in the next 3 weeks. So get above the boxes so you don't go through the arrows. If I'm an investor, I did answer that to a family member. If I'm an investor in ARM and I want to buy shares, I would rather sell puts to own shares rather than buy them upfront here. So now, it looks like a base that is buyable as an investment. It looks like a problem at 17. So even if it gets to 17, it's going to hit a wall. So if I go long, and I believe I shared a long idea for Asana by request, partial entry, and I would not add unless it goes to like 12. And I have the opportunity to swing up to 1750. And how much money would I risk? It depends on the risk appetite. It is an investment slash swing trade. I mean, it's a good company. Speaking of good companies, this one is an outstanding company, but not a great place to get long because you're going into a prior fail. It is a higher low, higher high trend. You can see it. It's up, up and away, but there are big dips in between. And we just came out of one, probably too fast. So this looked awesome. So awesome, awesome. So wait for another dip. That would be my motive, my plan of action with it. This is a daily chart. Wait for another dip for it to stabilize at 1280 would be the plan. Boeing, great relief. It suffered huge disasters in the prices and the headlines. I think there's a media assault on it. Somebody big wants to buy shares, so they destroyed it in the media. This is my statement. I don't have proof, but it happens too often for it to be coincidence. One night, it flashed down to 173 after hours. Unless you were trading after hours, you missed it, and immediately recovers and does that. They got their entry, 10% rally from there. I'm still long. I sold puts and put spreads that I shared with you. They came under fire, but they're fine now. If I was long and recovered my money from this rally, I would make my position a lot smaller because I'm pretty sure I was worried about it. I wasn't worried about mine. I was confident with my position, but now it's a lot better. Would I go long Boeing at this point? No, because it's going into see that area of support that it lost? Well, we have to change this to resistance now. It's a big wall of resistance. For Boeing to go above 208, it would need a headline like something like you wouldn't believe in order to get the people confidence to push through it. For me, this is an exit point zone, 200, then an entry point for traders. Investors, no decisions. There's nothing to do. I haven't traded it in a long time, but I can tell you when I see a stock making lower highs and lower lows when the markets cannot stop rallying, we should use different colors. When the market cannot stop rallying, it makes me wonder why. Also, these three things and that, what is that, right? So a huge selling volume here as soon as supply, not volume. This tells me that it's probably easier to lose this area than take out that. And if this is the case, if we lose 100 round numbers, they will probably also lose 96. And if they do, they're probably going to 90. So all this is saying that lower highs and lower lows may continue because we haven't had another lower low. Be careful going long. I would not add to current position. Ooh, okay. So I had a discussion yesterday with BITO friends, actually. It was oh boy. I'm not going to name names, but I had a discussion yesterday that shows how people are trading on emotions. And if I had recorded it, I could tell you what's wrong with retail investment mentality. Long story short, a person that went long Bitcoin, which is what this is basically, at the high of the market in 2021 and lost a fortune, wrote it down, got out, got back in somewhere in the middle of this rally. And now they've recovered their losses and they're saying, no, I'm not going to exit. What if it goes to 150? That boggles my mind. And I made the mistake to tell them the valuation of Bitcoin, where it can go. And now they have even more hope because they didn't listen to anything else. They just listened to my number high and they were like, okay, I'm not getting out. So I'm a little bit more pragmatic. And you know me, I've been trading crypto for a while and I'm a big fan. I'm a fan, not a fanatic, but I'm a fan. So what do? I'm looking technically, if Bitcoin doesn't make a high soon, it's going to dip quite a bit and it'll be a tradable dip one more time. But I locked all my profits in coins, including this guy. Really, not at the very top. I've caught a few at the very top, but I still have a small core position that I will never trade out of, but it's free. Unlike that other person, it is most definitely not free. Okay. In fact, one of them took out $400,000 loan to get it done. They're up a lot, but they're not booking until it goes to 150 or 120. Okay. So if we lose the recent low in Bitcoin, we will end up in this zone for BITO. Percentage-wise, 7 to 9%. So 10% from current price if we don't push higher. Resistance at 31 for BITO, resistance at 32.50, and of course the high. I love the sticker, but not at these levels, not for me. As an investment, if you're investing in Bitcoin, this is not something I would hold, although it's paying a lot. It is not Bitcoin. Look into the prospectus. There's some sort of a trading juju inside, and they pay you. They try to move the price to mimic Bitcoin. I'm just warning you, it is not an accumulation of Bitcoin. BMY, look how prophetic that red path has been, and it's just us drawing whatever happened before and moving it forward. So rallies into 53, 53.50 will probably be met with sellers, and we could make lower lows. If the stock pushes past the failures at 55, it will have a nice spike. So if you got long on this dip, you did right. See how high you can get with it. Just make sure to put a stop, not to take losses over it. BT, I don't even know what that is. Baytex Energy Corporation. Okay. Last week, they tried to push past this one, failed, which would have gotten them to 385. That's what you're tracking. How strong is the support into 335 is your question, to see if they can finish the job. Blackstone, good push past prior fail and an attempt at the prior fail from December. So that's the question. Can they break out of the highs from, looks like, Thursday? If they can bust through the highs from Thursday, they can get to 141. Luckily, they're falling into a support zone. Anything below 127 should have buyers. This also was pretty choppy. We'll take that out. And this came to fruition late, but it did. So you don't want to lose 122, but the conversation is not there yet. Okay, so the comments stand. Charter Communications, company P&L looks okay, and the stock falling out of bed. I forgot the headline, whatever it was. Now it's stuck. It has solid support below 275, 276, and a lot of resistance at 304, 305. If it can take out this failing point from February, late February, there's not a lot of volume up here, so it's easy for it to push through the volume. Although, why is it lagging so much? There are sellers at 316 to 325, I think, heavy sellers, and more so at 344-ish, 340. So be careful what you're chasing. The gap fill might not be that easy. Okay, CHWY. I said I would nibble long as an investment. My only reservation is that I said half position, because I would add the second half after a 30% fall. If CHWY loses last week's low, it's going to 1450, if not lower, which is exactly why I said partial position only. It is a bearish chart inside of an extremely bullish market. That's the warning. The business is fine, but the stock price is not right. So be careful. I would not add to CHWY if I'm long. And if I just don't want to own the stock, I should book my losses and get out. When I wrote it up, I was very specific. It's an investment starter position for somebody that wants to invest in it. Okay, CLSK. And if it was shares that I recommended. CLSK failed to break out last week. 3 lower highs. So you should watch that relationship. So can they break through 22? They do have a lot of support. So they can bounce off of 18 and try it again. So that's what you're looking for. 18 support zone, 22 resistance. Who's going to break out first? Technically, I could argue that 17 is coming if they don't do that like by Monday or Tuesday. Comcast was a good entry on that support zone. If you're an investor, the P&L is fine. I don't know about the business. I'd have to delve into it to see if they're a dinosaur or not. They are buying dips for a couple months. So the support is strong enough below 42 in order to support their opportunity to try to break out of 43.80. But it is heavy resistance, so it's pretty difficult to invest in it here with confidence. So starter positions if you're not long already. Credit put spreads could work. In fact, iron condors could work. Sold puts could work. All depends on when is the earnings, 32 days before earnings. Crowdstrike, learned the fun fact about them. They're, I think, cybersecurity. So you need algorithm or whatever you call it in order to encrypt. You need some sort of a direction for computers to use in order to encrypt. So they use a wall of lava lamps because it's completely random. And their computers use the movement in the lava lamps in order to come up with their algorithm, which is pretty cool, because they said even if you program it, it's going to have some sort of logic and it's hackable, but it was completely random because of lava lamps. Then you can even have them look at the lava lamps, the hackers, and they wouldn't be able to figure it out. Pretty cool trick. Okay. So 292 extreme buy, 372, 377, 78 extreme sell. We're right in the middle-ish. Nothing to do from that perspective. You have support at 312, support at 303, much better support below 300. So if it falls into 300, the idea is to get long. If it rallies, expect a lot of sellers. I believe this was the box that I thought it would be in after reporting, or something we did with this box on a shorter time frame, and it's in the middle of it. It's behaving well relative to the stock charts. Cisco, a huge failure here, whatever happened here, and I think happened overnight. And I said, what the heck was that? But look at Wall Street manipulating stuff, right? Yeah. So maybe we're going there, is what I'm saying. So you can stay long if you want to, and in the hopes of them going there. You do have support at 49. So if you lose 49, forget about that candle because you're probably going to 47.4. But interesting candle back there. If you're investing in Cisco, it's a dinosaur, so make sure you use just simple logic, not to add too many times too often. Carvana, too high for me. It is still a risky stock, a shaky business. I haven't looked at their cash position, but you should look at how much cash they need or they generate from their operations. That is the critical. Is this an all-time high? Oh my Lord, if it is. Oh no, okay. Like what? No way. Okay, so when it's going into this cluster from years ago, a couple of years ago, it had this disaster zone, and now it's going back into it. I would not start positions here, even though technically it could go higher. So don't short it because you don't like it fundamentally. Technically, the bulls are in charge until you lose 74. Once you lose 74, you're going to 64. But for now, you're looking for a breakout to finish the job at 100. 80 is a target this week if they don't do that. If they don't break out of 90, they'll be at 80 this week. Likely. Us recovering from a disaster last year. It's taking a while. These were correct. A rally and drop. Whoops, they did that. So we can take that stupid thing out and move this box, whatever that is, to see if it gives us any clues. So this is an area of contention they're trying to get out of. Let's zoom out. Okay. You could argue that it can crawl all the way to 88 in the next 6 months if not interrupted by some headline like earnings in 38 days. On a weekly basis, the bulls are trying to make a charge. On a daily basis, you will see that they have a mountain to climb. So in order to get out of 83, what's it going to take? All-time high markets? Well, we're there. Extreme bullishness? We're there. What is it going to take? Rate cuts? People believe we're there. I don't, but they do. So it's on the march. It has support. It has a mountain to climb. Caesar. This is a good base to start longs if you know the company and if you know there aren't any headlines in between now and then. And I include other companies that look like it. Like if you look at another hotel that looks like it and trades along with it, make sure that hotel is not reporting earnings. If I'm long, I can be long. I'm expecting 46 or 47. That's the reason people get long here in Caesar. If it dips into 39, I would get long with a stop. The stop would be if it goes below 38 or 37.30, I would get out. Okay, these are trading and investment comments. Run. Airline companies, oh my gosh. I've been flying more so than a long. I haven't flown this much in a long time, and I'm amazed that they can actually exist as a business, as disorganized as they are. Now, technically, the chart is going into a prior fail from, let's see, when is that? Last summer? I don't know if I want to go long the stock that way. It is not an obvious entry point that's as gentle as I can tell it. And there's upcoming resistance above. Disney, same. Not an obvious entry point and shortable, in fact. Why is it shortable? Because the last time, 2, 3, 4 times it was up here, it was a disaster. So I'm banking that it's going to find some sellers. Everyone stuck here is tempted to sell, right? And this area was huge failing point zone. So all of this, in my opinion, is resistance. So I don't start longs when the stock is coming into resistance. I don't care how strong they are. So it is a bullish chart. Just be careful. I think it goes to 113 or 111 before 121. Headlines aside, 45 days until earnings. This one is bearish. I would be holding puts if I'm trading. The company is fine. Long term is very exciting for Wall Street. There's a good chance it's at 44.50 in the next couple of weeks. If I look left, there's no immediate resistance, although there is a ton of resistance. Look back here. But it's not immediate. So if the market goes up 5%, this one might find itself going up as well. But I think down is easier. Wow, Devon. Wow. So we said, somebody asked me about it, and I said it's a support zone. If you're an investor, you can hold it. If that's the case, if I'm an investor, then I shouldn't look at it. But if I'm a trader, I'll be out. 50 should be a wall. It should be. So how close to 50 do I want to get before calling it quits if I was a trader? An investment thing is different. But look at this chug. It looks like Exxon, doesn't it? There's something going on in the energy sector. Some people are piling in. I spoke to a smart overall investor, and he says if the yen is unwinding, Japan, I read that Japan is unwinding their QE after 17 years. I said, what are the repercussions? And one of them was a rise in commodity prices, so oil. And maybe somebody with billions is shifting to that concept. They're systemically adding to their oil positions, and that's why you see this consistent chug higher. This doesn't look like normal chop. Like this is normal chop. This here, like Exxon, does not look like normal chop. So we just had a discussion right there, what I just said, on a macro level that may affect the whole stock market. So if you didn't get it, rewind it and watch it again and try to hunt down the headlines on those in order to get educated on it. Okay, eyes, lips, and face. Look at this pivotal level. All right, so I'm going to make this visible globally. Prior fail on an earnings reaction. Whenever they have an earnings reaction, it's an honest reaction to the yay and the whoa, my gosh. So they just gave you two levels, 187 and basically 160. They went up above it, so they should use that zone as support. Technically, if they lose 186 or 87, they will come back in the middle of this zone. For now, the bulls are in charge, and they have just as much odds of breaking out from 222.50. So you're in the middle. If you buy a call, you're guessing. If you buy a put, you're guessing. Make sure to use maybe credit spreads to play it out. I can't tell you which way it's going to go up or down, but I can tell you where the support and resistance levels are and what to do where. In phase, I will not trade it. It's approaching earnings. I think there are other things that are reporting earnings, and it's just too violent. I will buy the dip. So if it does fall one day 10% or something like that, I will jump in and try to sell puts in it because the business is fine. It looks like it, unless there's a trend developing with the sales. Okay, so maybe the business is not fine. That's a sharp drop in sales on a quarterly basis and net income. So right here, I would not invest. If I'm looking to invest, I would be patient or sell puts so that I'd be owning shares lower and build myself a buffer. If I own shares, I will not add. If I own calls, I definitely would not add, and I would revisit those calls and make sure the odds of success for them are still good. So this one, I don't know why you guys are asking about it, but it flash crashed based on the Hindenburg report or whatever. So it was okay to get long down here. Up here, we're guessing. We don't know what Hindenburg said. If you know the company, then buy it. If you don't know the company, then don't touch it. I hesitate trading things that suddenly come into the headlines. I used to trade the stock a lot until they became a REIT, and then I pulled out. So I'm not sure you can use options to trade this thing successfully. Do the homework on the company itself and see legitimately if it's a problem or not. 780 must hold. If you don't hold 780, you will go back to 740 or 730. Be careful. I don't think it's going to be able to break it through 850 again in a long time. So make sure you know your target while you're doing whatever you're doing. Okay, energy transfer, it avoided this scenario, so we can delete that. It has stair-stepped up, energy company. We have support. You can say the same thing, that you have a support zone down here. So dips are viable into the support zone. So any approach of 15 is outstanding entry point from a 2-hour swing trade opportunity. Any breakout from the high from last week will probably get you 1620. In order to decide on investment, you need to zoom out, and I would not invest in this company. If you're trading it, great. If you're not, it's a short. Look at this. You're going into a year of selling zone. I mean, that's a strong push, but it's going to break down from here and go to probably 10 in the next 3 or 4 months. Technically, it's doable. I'm not going to tell you to exit all your positions. I'm just giving you bullish short term, not so bullish long term. And it's not immediate. Like, I wouldn't buy a put and hold it. If you want to discuss it, pop into the live room. We'll discuss it. What is this? Fastenal. What is this here? What's that tick up there at 79.55? This is a weird stock, so be careful what you're doing with it. Wow, awesome P&L. I should look at the P&L right now. Awesome stock chart. I should look at the P&L and see sales rising like this, right? Let's check. No, this is another mystery one, like that stupid, I forgot the name of the company, like a retail company that I keep picking on, Abercrombie. So ANF. What's with the stock chart that looks like Nvidia that doubled its income and tripled or quadrupled its net income, doubled its sales and tripled its net income, where this one is flat as a pancake? Yeah, I don't get it. It's not for me. Are you investing? Are you trading? I would be on the short side. This stock can be at 74 or lower in the next month, within a month. I wouldn't short it though, because like ANF, it proved to be too sustainable. Like whoever's trading it is just got a lot of conviction. Way more conviction than I have interest in it. How about that? This 5 is going to probably try to bounce off of the zone of 165 right there, and it's going to hit a brick wall of sellers. So I think I would use any strength to get out of longs. So if I bought the dip, I would trade it. If I'm stuck in it and I get a relief rally that helps me, I would get out, or protected by selling covered calls and or buying puts at put spreads. Okay, so technically, once they lost 180, 177, they become it's become a bearish chart. Rallies are to be sold. Shorter term, you can see it. It's even more bearish on the shorter term. Flex, I don't know the company, so we'll talk charts. stuck. You have strong buyers into 26.6 and strong sellers 31. So if you lose the low from the last 10 days, you're going to end up at 24.5. And the opposite scenario is, I don't think will happen. I vote it's easier from the chart. It's easier to go lower than higher, but it's available. There are sellers at into 30. FUTU, that's the last one in this bunch. I haven't been asked about FUTU in a long time. Bearish. If you lose last week's low, which is right there, it closed on last week's low, you're going to lose a lot more than that. So it could break into 49. If it doesn't come out of 58, it's going to 49 this week. So with that, we end the first video.